Hello my fellow investors, and welcome back to another earnings report analysis as well as a small stock analysis as well. When it comes to the company, guys, Lockheed Martin, now they did have earnings as of yesterday and I didn't realize it, and it was actually Stefan and Elizabeth that recommended it. So you know what, let's actually take a look at Lockheed Martin because, well, this is a company that I own, guys. They're actually up on the 1 year, which is actually really interesting. So let's actually take a look at their earnings, guys, and see what we can actually learn, and then make a quick stock analysis on whether or not we would like to buy this company. So with that said, let's get started with this analysis. And now we are here, guys, at their earnings report. And as always, I will have this website, link in the description below, the first one that you guys will see. So guys, let's actually take a look at Lockheed Martin because this is actually fairly interesting. Now, before we actually read this, let's actually come over here to Seeking Alpha and see that when it came to their EPS normalized actual, it was a beat by a whopping 16 cents. They did $6.87. When it came to their EPS gap actual, it was also a beat by 7 cents, $6.71. Revenue actual was $16.58 billion, which unfortunately was a miss by $100.26 million. So that's actually fairly interesting because, well, when you guys see the past revenue growth, you're gonna be like, that is insane. So the fact that they're actually missing, this might damper a little bit of my predictions when it comes to their future. Now guys, look at this current share price, $439.96. This is actually interesting because they were sub 400 just a couple months ago, and I think at that time I said that when it was at that point that it was a good buy. So let's actually now come over here to the earnings report and see what we can actually learn. So we got Lockheed Martin's report for third quarter 2022. We got net sales $16.6 billion, which is what we just saw, and net earnings of $1.8 billion or $6.71 per share. They also tell us, guys, the cash from operations of $3.1 billion, and they also tell us the free cash flow of $2.7 billion. Return $2.1 billion of cash to shareholders through share repurchases and dividends. And boy, have they been issuing a dividend. We're gonna take a look at all this in just 1 second after this, but man, their share buybacks as well as their dividends is just mind-boggling. It's one of the highest dividends I have seen so far. Increased share repurchase authority by $14 billion, so they're also increasing their share buybacks, which is crazy. Increased quarterly dividends by 7% to now $3 per share. Guys, multiply that by 4 because they do pay a quarterly. That's a $12 per share in annual dividends. That is crazy. That's one of the highest dividends thus far. Increased backlog to $140 billion and reaffirms 2022 financial outlook. Yeah, so they actually were just like, this is in line with pretty much everything that we were looking for, so it may actually just continue this way, which is actually looking really good. So here's a couple points when it came to the CEO's notes over here. We got Lockheed Martin delivered a solid quarter highlighted by strength in free cash flow, orders, and operating margins. That positions us well to achieve our full year commitments. Guys, they're in line with what they're going to do this year, which is really good. Our continuing ability to deliver strong financial performance in turn enables further investments in the 21st century security technologies, essential to support our customers in conducting effective joint all-domain operations. These technologies include hypersonic, directed energy, and autonomy, as well as cutting-edge digital capabilities in our evolving 5G MIL, open standards-based architecture. In addition, we are investing in production and sustainment capacity for the solutions needed now to defend our allies and our nations, including F-35s, Javelins, HIMARS. Moreover, we today announced an additional $14 billion in repurchase authority to go with our recent increase industry-leading dividend for the benefit of our investors. Wow, guys, absolutely crazy. Now, obviously, when it comes to Lockheed Martin, guys, okay, their main customer is, guess who? The US government, mainly specifically the military. So a lot of people are going to find issues when investing into companies like these, like Raytheon, like Boeing, but I really should probably make a video on how there is no such thing as moral investing, because essentially what is moral to you may not be moral to somebody else. And when it comes to publicly traded companies, guys, there aren't any companies out there that are 100% moral. So when it comes to Lockheed Martin, a lot of people might be like, well, if you invest in this, you're clearly supporting war, you're supporting all this. Well, sure, I guess you could say that, but the thing is that you could pretty much say the same thing about, for example, tobacco companies, right? Tobacco companies are immoral, yet people still invest in them because essentially what is moral to some people may not be moral to other people, right? So that's just the way that I see it. So when it comes to investing in Lockheed Martin, guys, it really just depends as to what your baseline for that kind of stuff is. In my personal opinion, the United States government will always require, defense will always require weaponry. So if that's going to be the case, if my US tax dollars are going to be used for this, may as well get something in return back. That's just kind of the way that I see it. But now, guys, let's actually come over here to this chart, pretty much reiterating everything that we just saw, but I want to compare it to that of 2021. So we got here net sales 2022 was $16.58 billion, whereas 2021, guys, it was $16 billion, which was a pretty good increase right there. When it came to their consolidated operating profits, this was a little bit of a decrease, going from 2.3 billion to now 2.2 billion. Net earnings was a massive increase, going from 614 million to 1.8 billion. Diluted earnings per share in 2021, guys, it was $2.21, and now it's $6. That's a massive jump, guys. Absolutely crazy. Cash from operations was a massive increase, going from around 2 billion to now 3 billion. And capital expenditures also went up, but actually not by much. Their cash from operations went significantly higher than that of their capital expenditures, going from negative 316 million to negative $405 million, which increased their cash flow, going from 1.6 billion to 2.7 billion dollars. So guys, they did amazing. Honestly, they did amazing. Obviously, even with that, the fact that they are still in line with their 2022 projections, they still did not meet analyst expectations when it came to their revenue. But nonetheless, I think it's still very notable. So now let's come over here to the discounted free cash flow. We got the ticker symbol for LMT, market cap of $116.7 billion with a PE of 25.45 and a current share price of $439.96. And the reason why I actually find this hilarious is because take a look at this graph, guys. Now, obviously, we do have a war in Ukraine, right? And we're sending a lot of money and a lot of weapons over there, which kind of justifies a company like this to increase 18.57% on the year, and on the year to date 24.16%. Now, I would actually like to highlight something, because if you see my other Lockheed Martin, or at least the most recent one aside from this one, I made that video at around like this area over here, I believe, and I was just like, this company should be a good buy at around like the $340, $320 mark. And I kicked myself because I did not buy more. I really did not buy more. And look at the price now, guys, $439. That is insane. So I wish I would have gotten more, and on top of that, I would have gotten a much higher dividend yield, because they did increase it to now $12 per annual dividends per share, which is absolutely insane, guys. Not only that, they have a 5-year CAGR of 9% with 19 consecutive years of dividend growth. And on top of that, look at this. Their ex-dividend day is actually on November 30th, and they pay out December 30th. So assuming that this might be a good buy now, I don't necessarily know. I don't necessarily think so, but assuming that it is, guys, you might still be getting this dividend after all. And on top of that, this $12 actually becomes $3.2 billion in dividends being paid out every single year. And after regarding their 5-year average free cash flow, they're still left with $2.3 billion. After their last year's free cash flow, it is $4.5 billion. And these payout ratios, guys, even after this massive increase in their dividend, it is still 41.15 for the last year's free cash flow, and under 60, 58.45 for the 5-year average, which is insane. Now let's take a look at some of these fundamentals. Net income, guys, increasing by 222% 5 years ago of $2 billion to 1 year ago of $6.3 billion. Now, they did dip here from 2 to 1 year ago, but I think that they'll get this back this year, seeing that, again, war in Ukraine, right? We got the free cash flow, guys. They did beat Q3's quarter last year this year, so this might actually have another increase. We got an increase of 45% on the 5-year, and of course they did dip here 4 years ago. I don't necessarily know what happened, something to look up, but nonetheless, guys, they did dip, but they've recovered fairly nice, with an average 5-year free cash flow of $5.4 billion. And now when it comes to the revenue, guys, look at the steady increase. This is absolutely gorgeous. 49.96, essentially $50 billion to $67 billion, increase of 34.2%. And on top of that, even though they did not meet analyst estimates when it came to their revenue, guys, I still think that they're doing fairly good overall. And even though they're not beating analyst estimates, they still beat when it came to their last last year's same exact quarter net revenue. Looking now at the assets minus the liabilities, a very nice consistent increase, though they did have a negative value 5 years ago, but nonetheless it's still really solid growth. Average total assets is around 48.8 billion, average liabilities is 43.3 billion. Doing this difference, we get $5.5 billion. The cash flow minus liabilities, this is by far one of the best metrics I have seen so far when it comes to such a major company like this. Even though they are in the negative as of 1 year ago by negative 32.2 billion, guys, look at this. Every single year it has been getting smaller and smaller and smaller. That is exactly what you want to see. Average cash flow minus the average liabilities, we get negative $38.5 billion. And now when it comes to the shares outstanding, they have been buying back at a whopping 7.37% on the 5 year, going from 285 million to 264 million. And on top of that, even from 1 year ago, they decreased it by more than 2.5%, which is crazy. And remember what we just read over here, that they are planning increased share repurchase authority by $14 billion. So get ready, because the amount of shares that this will have is actually going to go down even more, which is great for their dividend affordability as well as our ownership of the shares. And when it comes to the cash and equivalents, they currently hold $2.4 billion, with an average of $2.4 billion. So now, guys, let's actually take a look at this, making some assumptions. Well, we got here the revenue growth and the predicted share buyback. Now, coming over here to Seeking Alpha's growth tab, we can see that the revenue growth forward is 0.71%. And I kind of do agree with that, seeing that, again, they did miss analyst estimates by around like $100 million or so. So I'm actually going to go in that similar kind of track. But then again, right, war unprecedented, as well as we have issues with China and possibly Taiwan as well, not just Russia and Ukraine. So who knows what could happen, guys. Obviously, those scenarios would occur mainly for the highest assumption, but let's go for the low one. Let's say everything ends in Ukraine, no more war, which is a good thing, right? Full disclosure, that's a good thing, but it will damper this company's revenue, obviously. We're going to put this, guys, at 0.5%. For the median assumption, let's go with 1%, and for the highest assumption, let's go with 1.5%. Now for the predicted share buyback, guys, they've been doing 7% on the 5 year. And on top of that, they have said that they're going to increase it by $14 billion. So let's actually say for the median at around 7%. For the high one, let's just go up to 10%. Let's go up by 3. And for the lowest one, let's go down by 3 to now 4%. Well, guys, now here we get some target share prices when it comes to this. And currently, as it stands, it's looking expensive. It's unfortunately, but it is looking expensive. Target share prices, not adjusting for debt, is $247 to $272. And then adjusting for debt, it does come down a little bit to $221 to $244. And of course, adding the margins of safety, it puts me between $188 to $232.51. So right now, guys, it's telling that it is expensive, but obviously anything can change with these numbers. Actually, let's change these numbers up a little bit. Let's say that for the lowest assumption, let's go with 2% revenue growth, right? For the median, let's actually go by, let's just go up by 2 and let's go up to 4. And for the highest assumption, let's say that it is now 6%. Well, guys, now looking at this, well, you can see now the numbers have drastically changed. Now, I actually prefer these assumptions more than the ones I made originally. The ones I made originally was based off of this revenue growth when it came to Seeking Alphas and analyst estimates. But it really sucks for me to say this, but I don't think the war in Ukraine is going to go away anytime soon, which is really sad. And on top of that, I don't think China will also back off of Taiwan, which again, really sad. We do not want that, right? We want nice, peaceful things. But if that were to happen, guys, if things were to really get worse, which it's heading in that direction, you might see the revenue growth increase by 6%. I'm not even joking about that. And that would become a target share price of $318.81, not adjusting for debt. So yeah, guys, that is absolutely massive. And even that, it is still overpriced. Again, they did have a massive surge this 1 year because of everything that's been happening. So it is what it is. But at the current share price, I think it is fairly expensive. But nonetheless, this is based off of my assumptions, guys. Please make your own assumptions. These calculators are available for all of you guys. The book value, the reevaluation, and the dividend tracking sheet. Have them all, guys. Make your own assumptions. This is not financial advice. All I'm asking for in return is just help me grow my channel. Like, subscribe, comment. It really does help. So thank you so much for everybody who have subscribed so far. Now let's actually take a look at this massive dividend of $12 per share, putting in $5,725. This will net you 13 shares, which becomes an annual annual dividends of $156.16. Let's actually put this value, guys, at this $318.81 over here, and let's see what this dividend would now be. $215 in annual dividends if this price were to fall anywhere around that $318. So again, it really just depends what you pay for a company like this. Hopefully things continue to fall. Hopefully this company does fall, so that way we could get that massive dividend when it comes to this kind of company, because I think no matter what, guys, the United States government will always require weaponry. All in all, that pretty much does it for this video on Lockheed Martin's earnings report, as well as the stock analysis as well. Hopefully you guys liked it, and honestly, as I said, I actually own this company, and I honestly wish I would have bought a lot more. Now, Elizabeth, I know you said it sucks because you didn't realize how much they grew, and I get that you're new at this, but yeah, it's the point of it is to find companies like these when they are beaten down, right? If you see a company that's worth, like, you know, $300, and then you do the analysis and then you say, oh, okay, this is looking like a really good company right now based on their fundamentals, is growing, everything is good, but they are beaten down, well, then it's the time to strike. And I know that you're just learning about stocks right now, but to everybody else, you had the opportunity to buy into Lockheed Martin when they were at around like the $340 back around 1 year ago. So if you pounced on it, congratulations. If not, well, in my personal opinion, look for companies that have those kinds of fundamentals in comparison to that share price. That pretty much is to this video, guys. Like if you like, comment, subscribe. It really does help with the algorithm on YouTube. You guys can follow me on my new tech sites, link in the description below. So with that said, peace out, and we'll see you all in the next stock analysis video.